You know, most traders, they pull up a standard price chart and think, okay, this is it. This is all the information I need. But what if I told you those familiar patterns, those candles you've been staring at, are only showing you half the picture? And maybe, just maybe, they're leaving out the most important part.
Get this, it takes your brain up to half a second just to see a price change on the screen and decide what to do. In the time it takes you to blink, trading algorithms have already placed and executed thousands of orders. So by the time you see a big move happening, the smart money is already in position. This isn't just a small speed advantage, it means you're fundamentally playing a different and much slower game.
So here's what we're going to cover in this explainer. First, we'll talk about why just looking at candles can be misleading. Then, we'll uncover the invisible market where the real game is played. After that, we'll look at the tools you need to see what's happening there. We'll walk through a real-world example, and finally, we'll wrap it all up with a whole new way of looking at the market, shifting from just reacting to actually reading it.
All right, let's jump right into part one and break down why the way most people trade is, well, kind of set up for failure from the start.
The source material kicks off with a pretty brutal statistic. A staggering 96% of traders don't make money. And it's not because they aren't intelligent people. It's because they're focused on the wrong thing. They're chasing the effects, the candles, instead of understanding the cause.
And this right here is the core of the issue. A big green candle just tells you the outcome of a battle. It doesn't show you the battle itself. Relying only on price is like trying to understand a football game by only looking at the scoreboard at the end. You see who won, sure, but you have no idea about the key plays, the momentum shifts, or the strategies that actually decided the game.
So if the price chart is just the scoreboard, where is the actual game being played? Well, it's time to pull back the curtain and look at this invisible market.
Now, this is the market we all know, right? The cash market. You buy some shares of a company, you sell some shares. It's direct, it's straightforward, but it's not where the real power is. And here's where things get really interesting. The scale of this other invisible market isn't just a little bigger. It's absolutely massive. It changes everything.
That's right. For every $1 being traded in the cash market that everyone watches, there are $10 being traded in the derivatives market. That's options and futures. That's where the big institutions are really operating. Their activity in this gigantic arena is what creates the waves that eventually crash on the shore of the cash market. It truly is a game within a game, and most retail traders are completely blind to it.
So how in the world do you see this invisible market? Well, you can't use standard charts. You need a specialized toolkit, the kind the pros use.
The first tool is called Market Profile. The best way to think of it is like an MRI for the market. Instead of just showing you a single price point, it shows you where the market has spent the most time and traded the most volume. It reveals the market's skeleton, the key structural levels where institutions have been buying and selling.
Now, if Market Profile is the MRI showing you the structure, then OrderFlow is the live EKG, showing you the market's heartbeat, tick by tick. It doesn't just tell you the price moved up, it shows you why it moved up. You can literally see how many aggressive buy orders hit the market versus sell orders at every single price. It's the live
You wouldn't face Jasprit Bumrah with a plastic bat. Yet thousands of traders enter India's derivatives market with
Percent of traders lose, not because they aren't smart, but because they chase candles and ignore what institutions are actually doing.
12-video e-course reveals how markets actually move through order flow and market profile. See the forces behind price, not just price itself.
Stop reacting to candles. Start reading institutional intent. Join the e-course now. 4,909 for lifetime access.
Human traders need 200 to 500 milliseconds to process information and react to market changes.
Trading algorithms react in microseconds, literally 1,000 times faster than human thought.
By the time you see a price move on traditional charts, algorithms have already positioned themselves.
Order flow reveals institutional positioning before it becomes visible in price. Your early warning system.
Good evening, everyone. Good evening, all. A quick sound check. Am I audible? Great. So, welcome to this Monday 5 p.m. session, and we are right there at the first weekly settlement of this month of November. So, expiry days are not random trades. They are created, and they are created of existing positions of big players. And what we do is we track that inventory of the big players which has been created in the option inventory, and we track them via the structure and the other tools which we have. So we have 40,000 crore plus of volumes happening of uh, money transacting on expiry days, on settlement days. So live data is very important, and we need to be aware about what the latest readings are in the market. So we cannot depend on a 3-minute delayed data like the open interest to know what the big players are doing. They would have entered, they would have made their move, and we would be a laggard. So that is the reason we have some tools which we follow, and we have been specifying about that and explaining that how to use them nearing the settlement, and especially on the settlement day. So we'll come to that in a bit once we discuss the profile chart and the order flow, and then we'll go on to the tools which we need to follow for tomorrow's settlement. But to start today's session, let us have a quick review of the month as well as the week in spot. So we completed the month of October last Friday, and what kind of structure did we have in the Nifty spot? So we have the monthly chart, monthly report put up on the website under the forum section, and what we have done in spot on the monthly time frame, the October month, is formed a double distribution profile to the upside. So you can have a view of a chart on screen, which is the daily chart of all the sessions of all the trading days of October, and this is spot. So you can see how right on the first day of the month we got a double distribution trend day up with an extension handle and an initiative buying tail. And to recall, 24774 was the rollover point for the October series. And right on the first day of the series, we got this initiative move by the buyers, which was telling us that the buyer PLR is to the upside, the path of least resistance. So once we took out that 24774, we never got back below it, and we continued to get a trending move higher. Yes, we did get one pullback on the 14th of October, which left a pullback low, and then the uptrend resumed. And we had this small 2-day balance in just before Diwali, in the Diwali week. This was the expiry day, 20th of October, and this was the Mahurat trading day. So after this 2-day balance, we got a gap up on 23rd. The session post Diwali was a gap up. It was on that news of some Trump tariff, and but there was no confirmation as such. That is the reason this gap up was used by the sellers to get back in and the buyers to book profits. So what we saw in this gap up was a failed auction. The buyer had failed to extend maybe for the first time in the entire month, and this failed auction marked the end of the up move, and then we saw a balance being formed for the rest of the month. So we did get a retracement, and we made two pullback lows. This was 25718, and what we saw on Friday 31st of October was 25711. So what we got on the monthly time frame was a double distribution trend up profile, and we had an initiative buying tail from 24747 to 605. This is that initiative buying tail, and then we had this extension handle at 24867 and 24904 formed, after which we formed this balance, and from this balance we again got an extension handle at 25330, and we went on to leave a zone of singles. So this is the DD zone for the month of October, 25711 to 25330, and this will be the support to watch as we enter the month of November. And we have the series VWAP at 25501. This VWAP will be an important reference. Why? Because it was a buyer dominated profile. So we can expect this to be defended. But this is not going to be a line in stone. We will have to see what the structure and then the order flow shows us when we get there. And on the upside, we will need to find initiative buying above this POC 25875. So what we have done on the monthly chart is we have formed a balance at the top and the POC shifted in this upper distribution. You can see this is a lower distribution, this is the upper distribution, and we have zones, fast zones, which separates these distributions. So this 25711 to 25330 is the support zone, with the VWAP being the midpoint and an important support. So this will be the reference on the downside, whereas on the upside we will need to get buying above this and then negate this failed auction, which is also coinciding with this month's rollover point of 26097. So I always keep mentioning how the levels will keep overlapping in spot and futures. So you can see how 26090 was the rollover point. This is a mistake. It was not 26097 but 26090, and how we made a high in spot at 26097 last week, which again turned out to be a swing high just below the failed auction and the 2025 highs as of now, which is at 26104. So this is about the monthly time frame, and you can see this level what we made in June 2025, 25669 I think was that high, which has been taken out with an extension handle. And if you see today's auction, the low which we have made today is 25645. That means this breakout on the monthly time frame has been tested and for now has been defended. So this is how you know what is happening on the higher time frame, and you mark these references which are valid for the rest of the month. So we also have the monthly zones marked. So as I mentioned, the rollover point is at 26090, the series VWAP is at 25501, and the POC is at 25875. So these three would be the important monthly references which we will watch all of November. So this will be support. We for now we are above this, and this will be the first stalling point. The highs which we made was today was 25801, I think 803. So this is still way off. We will come to another important level in the weekly chart, and as long as 25875 and 26090 are not taken out, we cannot be very bullish for the month of November. And as for the downside, if this 25501 breaks and sustains, then we can look for more downside. So this is how we are placed in the monthly spot in Nifty. Let us now do a quick review of the Bank Nifty spot. Bank Nifty was more bullish of the two, and it gave a big almost 4000 point range on the monthly time frame. So the average ATR of monthly is around 3100 odd points, but we made close to 4000 points in the month of October. So it was a triple distribution profile to the upside. And just like how we saw the daily chart of Nifty, Bank Nifty also began more aggressively, because the Nifty was a more subdued double distribution trend day with a small initiative buying tail. But in the case of Bank Nifty, it was a pretty good A period buying tail and a good range. And you can see how the rollover point of 55,000, like how we had 24774 in Nifty futures, 55,000 was the rollover point for October, and that was taken out on the first day itself. That is the reason we give so much of importance to the rollover point when a new series and a new month begins. And you can see how Bank Nifty continued to rise from mostly higher values. Yes, we did have days of balance in between, but the PLR remained to the upside. And we went on to make new all-time highs, and post Diwali break, when we had that new highs, the gap up and new highs, that day we got a neutral extreme profile, and we made that 58577 high, and the POC shifted to the top 58522 7 is the VPOC, unvisited POC from 23rd of October. And after which we did get a retracement, but post the retracement, we are in a balance where on the upside, we are not able to take out this VPOC, which is also coinciding with the rollover point. 58515 is the rollover point for the November series. And you can see how spot had already left a footprint on 23rd itself regarding the same. So this is the reason we use both spot and futures, although the volumes are only in futures and we do the trades based on the futures volumes, but spot also gives us some important references which again are marked out in the futures chart as well. So what we have done in Bank Nifty on the monthly is form a triple distribution trend up profile with completely higher value. The rollover point is at 58515 and the October series VWAP, which will be an important reference, is at 57124. So the same thing as in Nifty spot, 57482 is the pullback low and a swing low, which is the support, immediate support. If we break this, we are in for a test of this VWAP 57124 and this extension handle of 56770. So 57480 to 56770 is that you can say zone of singles on the monthly chart, which will be the support for the as we get into the month of November on the downside. That is on the downside. So the monthly zones in Bank Nifty spot, the rollover point is 58515. The series VWAP 57124 and the POC also shifted in the upper segment, upper distribution, which is at 58160. So as long as today we did get above this 58160, but we were not able to close above this. So these higher time frame references are not levels which have to be watched on a 1 minute or a 3 minute time frame. You need to consistently close above this or below this levels on a daily for 2-3 days, which sets up the bigger time frame trend. So today we did test it, but we were not able to close above this. So we will have to see what the following sessions come up. And in futures, we've just made a high just below this 58515. So in futures, we were not able to get past the rollover point. In spot, you can say for now we have got rejection once we tested this monthly POC. So we will have to check out on the downside if we get a probe lower, what happens when we test this 57124 level. And before that, this 57482, the swing low from last week, would be the first level of support. So this is as far as the monthly levels are concerned. 58515, 57124 and 58160. These are the three levels which we are going to mark and they will remain important for the month of November. And to repeat the Nifty levels, it will be 26090, the rollover point, 25875, the POC, and 25501 would be the which is the series VWAP. So let's now move on to the weekly report. And this is again in spot. And let's have a look of what we have done in the last week in Nifty spot. So Nifty spot formed a neutral extreme profile to the downside in the last week. And you can see how it's very clear there was no clear direction last week. We started with this big initiative buying tail, but we formed a P-shaped profile, which was telling us short covering. We made a probe above this, but got a selling tail, and we went on to form an outside bar. So we formed this 2-day balance. We were not ready to leave this weekly value. And then we got a gap up on Wednesday and we made a range extension higher, but these high tag the rollover point because 28th of October was where we got confirmed what the rollover point would be, and which was at 26090. And what did spot do on 29th? It tested the rollover point, but it left a responsive selling tail. This is a very small selling tail, but it gave us an important cue because it was showing rejection at the rollover point. So when you are getting a responsive selling tail, you are getting the confirmation that the buyers are not adding here. And to add to that context, we had a failed auction at this 26104 from 23rd of October. So when and the failed auction, we are very clear with the bias. Below the failed auction, we are bearish. Above the failed auction, we are bullish. Same thing with the rollover point. So once the rollover point showed us rejection, we knew that the November series is starting on a not a very bullish note. And this was further confirmed by this initiative selling tail which we got on Thursday, that RS plus IS means the PLR is now to the downside. And we made lower value on Thursday and we got rejected at this value area high and continued the down move on Friday. So we made an attempt to probe higher in the weekly time frame. We failed. In fact, we made new lows on Tuesday. So this low of Tuesday 25810 was actually a failed auction on the weekly time frame. But this failed auction got negated on Friday. We closed above this initial balance on 29th, which is why this was a failed auction. But this failed auction was broken and we closed below it. So that is the reason you see how this 25810 is an important reference, and that is where we stalled today. I'll open up today's chart and we will see what we have done in Nifty spot today. So this will remain an important level. So these are the daily structure, what happened last week, and we have the weekly profile. So neutral extreme is fine, but what is the kind of value we have formed? You can see how we have formed a 2-week balance overall. Yes, on the daily we are getting we it seems as if there is no order. We are getting one P and then B and then an outside bar and then an inside bar, and suddenly we come lower, but again that gets rejected. But that is not chaos. If you see the bigger time frame, you will know why that is happening, because the bigger time frame is busy forming a balance. We are seeing overlapping value on the weekly time frame, and this is a very powerful signal. So the bigger the time frame the balance is forming, the imbalance would be of a greater move. So we will have to wait this imbalance to start and confirm that yes, this is an imbalance which is moving away from this 2-week balance, and then we could get a good directional move, which was missing all of last week. Yes, in October we got mostly a trending move to the upside, but after that from the last week of October, we've been forming this balance. So we will have to see how this plays out. And these were the hypos which were given for today. I'll open up the weekly chart in a bit and we'll study what we have done. So at the open, we broke below this 25711 and we tagged this POC, VPOC of 25672. But as I mentioned, that monthly breakout level of 25669 that held, and we made a low of 25645 and left a period buying tail. And that is the reason we went on to take off these upper hypos of 25775, the POC from Friday. But then again, as I mentioned, we stalled right at 25803, 25810. That negated weekly FA would be our immediate reference on the upside in the coming sessions. So this is what was on the spot chart. I'll open up the weekly spot in a bit and we will discuss the levels in spot for tomorrow. And then we will move on to the futures. But before that, let us also complete the Bank Nifty spot. So Bank Nifty spot was not as bearish, you can say, as Nifty, because we never broke the lows of last Monday. We got this initiative buying tail. We formed a 2-day balance. We tried to move higher above this weekly value. We failed. And so we got back into this weekly value, triggered the 80% rule, and we completed the 80% rule on Friday. So you can see how this test of weekly value was giving us a responsive buying tail. We left a tail in the D. So this was telling us that the Bank Nifty is holding this level. So that is how you, and the weekly structure was a normal variation one. And what we saw balance wise was a nice Gaussian curve. So this is a very prominent looking balance on the weekly time frame, and with a very ultra prominent POC. This is also the same level where we have the monthly POC 58160, and this will continue to act as a magnet till the time we don't get a initiative move away in either direction from here. So that is the reason today we tagged this, but we are not able to close above this. So we will have to see what the next couple of sessions show us, and accordingly get in sync with that particular time frame. So these were the hypos for today. We held the first hypo 57726. This buying tail from Friday was held, supported. That is the reason we took off this 57808. We got back into the weekly value. This weekly value has got a nice 80% setup. So once we got back into this, we did the 80% rule. We almost tagged the weekly value area high, which was at, I think, 58261. The high which we made today is, I think, 58254. So you can see how this 80% rule plays out perfectly in the weekly time frame. So we have tested these hypos, and we have formed a P-shaped profile in both. So let's now move on to the weekly chart with the current day's profile. So this is the Nifty spot chart. So you can see how in Nifty spot we had poor lows from the last 2 weeks, and these poor lows was repaired by a lower open. But the lower open, what did the lower open do? It did not give any follow through, and we left an initiative buying tail. We did get a dip in the C period and the G period, but you can see how it was taking support at this halfback, and this halfback is at 25692. So roughly around 25700 level. So keep in mind this 25700 level, and we'll come to that level when we look at the tools for tomorrow which we need to follow. And what we have done today is, this was an open auction because we opened lower, but we did not do much, and we made attempts to extend higher, but then we stalled right at that 25810 level. So if we are able to get back into this weekly value, because this is a nice balance, and we saw that in BankNifty that we already completed the 80% rule. If we get into this value and sustain, then we will be on for a 80% rule even in this weekly value in Nifty spot. So what are the levels to watch out for? The value area low is around the 25820 level. We have a prominent POC at 25935, and we have the value area high at that big round number of 26,000. So provided we get above this and hold for tomorrow, we can expect 25935 and 26002 on the upside in spot. And on the downside, this buying tail, which is at 25700, would be the support. We have formed a P-shaped profile, and we have closed right around the POC. So it is all set if we get a move away tomorrow, but we will have to get that confirmation by the open type in order flow, and accordingly see the structure also confirming the same. So this is as far as the Nifty spot is concerned. 25700, today's buying tail is the support, and I'll come to the confirmation how this gets confirmed with another tool. And on the upside, we have a small selling tail, and we have stalled right at that we negated failed auction of 25810, which would be the immediate reference on the upside. So as I mentioned, if we get into this in spot, we have the 80% rule. So 25935 would be our first objective, and 26,000 would be our next objective. So roughly looking at this itself, we can see 26,000 may be the upper reference for tomorrow, and we will see what the other tools are showing us. And whereas on the downside, if we negate this buying tail, then we're looking on the weekly time frame. The next support is right here at 25,470. So you can see how this 25,470 is coinciding with that series VWAP of 25,500, which is the October series VWAP. So that is what we are looking for on the downside, and below this we are looking for this 25356, which is again close to the 25,330 extension handle on the monthly time frame. So I told you the support, the DD zone on the monthly time frame is from 25,711 to 25,330. So that is now further breaking down into this zone, 25,700, this tail lows, and then 25,470 and 25,356. So this is how we are placed in Nifty spot. Let us have a quick look at the Bank Nifty spot chart of today, where we can see how beautifully Bank Nifty completed the 80% rule. And you can see how once we got back into this, it held the weekly value area low. The buying tail of today is right where the weekly value area low, which is 57924. So this is holding, and we have completed the 80% rule. So what do we need to see now? We need to see an extension handle at this for more upside in Bank Nifty in the coming sessions. If we are not able to get, this is kind of a rejection. So likely that we can do the reverse 80% rule lower, with the POC being the immediate reference. So this is what we have done in spot. The auction which has happened today has told us that the spot is still not ready to move away from this 2-week balance. The lower open got us back into this value. So this is balance is continuing to form. So we need to wait and then get a clear confirmation that yes, a fresh imbalance is started. So this is as far as the spot is concerned. Let's now move on to the futures chart. I have the Nifty futures profile chart on screen. We'll do the profile chart and then we'll move on to the order flow. So what was the reference in Nifty futures? So we can see how on Friday we were taking support at 25,900, and 25,900 was nothing but this buying tail from 24th of October. So once we were holding that, we saw the POC also shift lower there. We saw some buyers coming in big quantity on Friday, and that is the reason we were not able to break that. So because if we would have broke that, our first target was this 25,851, the halfback of 17th of October, and then this pullback low of 25,797. Below this pullback low, we would have looked for a test of this buying tail, 25,745. So these were already mentioned, these levels were already mentioned in the business area report of Friday. So on Friday, we tested this 25,900 and we held this. So today what we did, we opened lower, we broke below this 25,851 and we made a low of 25,800. We stalled right at this pullback low. So when you're doing that, and I'll come to the order flow chart in a bit, and the order flow is not showing you sellers adding and is showing you an RB bar, responsive buying pattern, you know that the sellers are booking out and you also need to come out of shorts. So what we did, we got back into previous range. First we got back into this about this POC, which was the first objective, and then we stalled at this HVN 25940. This is a HVN from Friday, and that is where we stalled. The D period high was right there, and the D acted like a seaside extension today. It showed us no demand at new highs, and it went on to test VWAP. And then what we did below VWAP, you can see how the FNG TPOs took support at the C period lows, which was the buying tail, and held. That is the reason we remained in a narrow range for most part of the day, and we settled down right at the POC. So this is a 2-day overlapping POC at the 25,900 level, which would be the important opening reference for tomorrow, settlement day. So this 25940 HVN would be the upper reference, and then we have this halfback and this broken anchored VWAP from 30th of September, which would be the upper reference. On the downside, we break below this buying tail of today, then we are again looking for a break of 25797 and this 25745. So this is as far as the futures chart is concerned. Moving to the order flow. So you can see how the morning A period order flow gave us this probe lower, but it showed us a RB bar, and the 25797 held. So when you're getting an RB, after a lower open, it is not giving you that confidence to hold on to short trades. And once we got back above VWAP, we are clearly going to test the upper levels, which was this POC of 25908 and this HVN of 25941. And here you can see how when we made those new marginal new highs in the C and D period, the demand was showing us zeros. So this is a very clear sign in order flow, which tells you that if you are long, the C side is done and you need to come out. And this gave us a retracement to the VWAP, but the VWAP again held. This C side low of 25845 held in both these two TPOs, where we again got zeros on the sell side. So you can see how this characteristic came in the opposite direction. In the C and D, we got zeros on buy side, and it told us that the upside is limited. And in the G and H and I, we've got zeros on the sell side. That is telling us that this A period buying tail is holding. So this is what the order flow is done, and what it is shown us into the close. The POC is again shifted right at the 25,900, and which is where we have closed. So this will be our opening reference. About 25,900 will be bullish, below this will be bearish, and the first reference on the upside would be this 25,940, and on the downside 25,845 would be our lower reference. So this is how we are placed for tomorrow's settlement, market profile wise and the order flow wise. So what are the other tools which we need to follow? So you can see how the VolumeX chart, which is on the left, is showing us complete chaos. That is the reason we were in a narrow range, and we continue to see the CE VolumeX and PE VolumeX keep coiling with each other. So at no point of time did any one of the two lines was in a clear advantage. That is the reason today the trade facilitation was on the poorer side. After we made that morning move, we remained in a very narrow range. Spectrum wise, what are the range? The upper range is at 26,000, and we saw this level in the spot chart also, and the lower range is at 25,700. We saw that as well in the spot chart. So 25,700 is the lower range of the spectrum, 26,000 is the upper range, and the gamma zero level is at 25,800. So the close has been nearer to 25,800. 25,763 to be precise is today's close in spot. So 25,800 in that negated FA of 25,810 would remain the immediate upside hurdle in spot. So this is how we can see how the option inventory is not shown any build up for tomorrow. Both the CE and the POI has been dropping. So we will have to see how this goes for tomorrow, and we will have to continue to track this, whether the OI is been adding and whether we are getting any clean signals in the VolumeX or about supply being greater than demand or vice versa. So coming to the next most important chart for tomorrow, the gamma density and the gamma exposure. What are these telling us? So we've already seen the structure, spot, futures profile chart and the order flow, and also the spectrum range. So what are these two important charts telling us? And this chart, this two window mode, will have to be tracked all day tomorrow, because this will show you as and when the live data changes. So you can see how the gamma density and the convexity are almost in sync. The gamma convexity is at 25,800 and the gamma density is at 25,750. So which is where we have closed today. So they are in a 50-point range for now, but if they'll be more effective and prominent if both of them point to the same number. So if this curve keeps getting steeper and both are pointing to the same level, for example 25,800, then you can expect the pin effect to come into play. And at the same time, what do you need to see in the gamma exposure chart? You need to see a short gamma structure with one peak. So what you're seeing right now is a dual peak with long gamma 25,800 and short gamma 25,700. So this dual peak means the inventory is still not settled, the settlement price is still not decided. So that is the reason when you have these dual peak kind of a structure with one being long gamma and other being short gamma, you can expect two-way moves. If during the day tomorrow this combines together and you only have one single peak with 25,800 and this short gamma starts to go higher and this long gamma reduces and you have the red above the green and this volumes increasing at a one single point, a single level of say 25,800, then you know that the pin effect is getting into play. If not, then we will need to keep tracking this and see how this keeps changing over as the day progresses. So these two would be very important in case this long gamma keeps changing, keeps going higher, then you can expect the 25,800 put guys to get more upside. And similarly, if this turns into long gamma, then you will have to see which of the call or the put of 25,700 is being forced to come out, and that will be seen with the help of VolumeX. So there, if in the VolumeX, if we are getting the demand more than the supply, and this 25,700 is the long short gamma is getting into long gamma, then you can expect the call side inventory to get hit, or the or if it is the other way around, then the 25,700 put side being hit. So this is definitely the 25,700 put, which is short gamma, with along with the 25,700 call, and here 25,800 would be the calls which are short and puts which are long. So we will need to track that, and we will have to see if there is some signal which comes in the VolumeX which is clearly showing us that the call VolumeX is diverting from the put VolumeX, and then we can get some good trades on the upside. So if that is not happening and this continues to remain in two peak mode with these two different levels in the gamma density and convexity, we will continue to oscillate between 25,700 and 25,800 in spot and keep forming a balance in today's value. So this is how it is placed for now. The latest data has to be looked at and seen for every minute how the inventory is changing hands and what you are seeing in these two very important tools. These are real-time charts, guys, and these get updated directly from data which is received from the NSE. These are real time. The open interest is something which the NSE itself is giving on a delayed basis. So that is something we cannot rely on. But this data over here, the VolumeX chart and the gamma density and exposure chart are all real time. And that is the reason we specify that we need to keep watching the live data. And that is the most important thing. And especially on settlement days where the inventory will keep adjusting. So you need to be aware about how the inventory has changed. And that is the reason we track the spectrum where the range is specified. The gamma 0 is there, and we need to see if the gamma 0 is short gamma or long gamma. For now, that is long gamma. So we need to see if this continues to remain long gamma or this gets into a single peak going forward. And this green gets below red in the same strike, or vice versa. So that is it for today from my side, guys. Tomorrow's is a very important first settlement of November, and we are starting a fresh month. So we will need to see, we are well below the rollover point in both. So in that regard, the PLR is to the downside, but we have seen how we have taken support at an important level in both. So 25,700 in Bank Nifty and 57,700 in Bank Nifty would be those references. So let's see how the first settlement plays out tomorrow, and we'll be back with some more interesting sessions going forward. Thank you guys for joining in. And in case you have any queries, you can please feel free to post them. You can email us at support@vtrender.com, or you can even DM me on X. My ID is at Uttam Goel and it is open for DMs.